Good morning. It's Wednesday. It's Hump Day, January 24th. And I say that all the time because you know what? One of my favorite commercials of all time is I forget the camel's name, but it's whoop, whoop. Guess what day it is? The Geico commercial with the humps, with the camel. We had a good day yesterday. Your newsletter, free yesterday. I put in the newsletter and I started the newsletter out with the tools that I use and kind of how I see myself using them and how you could use them. All three of them are paid. So you have to have a large enough account that you're managing in order to do it. I did it from the expensive to the middle tier to the bottom tier. And so the top one is TrendSpider. It is the most expensive. It is my number one tool that I use. If I had one tool to do it, I would use TrendSpider. If you want to sign up for TrendSpider, it's at the top here on my Linktree, linktr.ee/dailystockpick. You basically go in there, you sign up, and then you email me, and I will send you back ways to import your stuff. The second one that I did on yesterday's newsletter was Seeking Alpha Premium. This is I think it's $189 with my $50 off coupon, and it's the second one on the Linktree. This provides you articles. This provides you research. This provides you all the quant ratings. It provides you everything that you need to get in there. Now, the third tier is the least expensive. This is under $100. I believe it's $100 now. There will be a sale coming up in February that I will tell you about in February. I can't tell you right now. It will save you some additional money, but this is Alpha Picks. And this is basically one of those services that provides you, hey, we got in at this price and we're going to get out at this price. And it sends you emails and alerts. It tells you why. The reason I did this service was because of their return. Their returns are amazing compared to the S&P. They are up 70% versus the S&P, up 24% in 2 years. You can see total returns and you can view their performance. That's what's great about this service. 83% versus 28%. What I particularly like is when they actually do the picks, they provide you video and texting of why they did this. So it's a great learning platform for under $100 a year. And the performance is there under $100 a year. If you're not trading enough money, doesn't make sense to get it. If you are trading enough money, this is a good service to try out. So yesterday's newsletter, and again, these types of newsletters during the week are absolutely free. So you can sign up. Everything that you need to sign up, the links are right here in the link tree. The top one is TrendSpider. The second one is Seeking Alpha Premium. The third one is the Alpha Picks. Fourth one is Webull, because I have Webull. I love trading in Webull. I give you free stocks if you sign up. And the fifth one here is the newsletter. These are the top tools. If you're going to trade, this is my recipe for trading. So that's why I put it in the newsletter yesterday. That's why it's up there. That's what, I just wanted to make sure that everybody knows that. So here's where we are on the Qs. Right now it's 9:33. We opened up. We are up almost 1% on the Qs, which means my TQQ is doing well as well. If you got in at 407 on the Qs like the algorithm said to, you're up about 5% now. If you went into TQQQ when the algorithm said, and remember, I used this algorithm in TrendSpider to try and find entry points. But if you are in TrendSpider, in the algorithm, right now you're up 15%, triple levered ETF. And remember, I bought QQQ, but I wanted to leverage it against QQ again. I wanted to leverage it with TQQQ. So I triple lever. I just had this feeling like we were in a bull market. It was going to take off. That this simple beginning of January was dollar cost averaging, where everybody kind of sold off so that they could reposition themselves for the year. It just made sense, and it makes sense. And I said we're going to be in a bumpy ride until March. I think we see some type of pullback between now and March when the Fed meets, but I think it's off to the races. We can talk about Netflix earnings. We will. And I said yesterday that I think if you didn't have a position in Netflix, you should start a position in Netflix. Netflix killed it on earnings. I will put in the newsletter some articles from Seeking Alpha about Netflix earnings. They gapped up. You're going to see this gap between about 493, where it closed yesterday. Let's see where it closed. It closed at 491. It opened up today at, let's see, 537. You're trading right now at 547. I would expect you to get back to the all-time highs. This is a stock that just identified, and you're still 31% from the all-time highs at 700. So is it too late to get in? No. You've gained confirmation above here. If you buy in at 548, is it smart? I don't think so. I think you see some type of pullback probably to 520 or 530. But if you didn't get a position yesterday, you need to start looking at this one. They announced a partnership with the WWE starting in 2025. They also added a ton, I think 10 million new subscribers where they were expecting 3 million. This is the password crackdown. They also announced, the biggie that they announced was that they are getting rid of the lower cost ad-free tier. Remember what I said in the last time that I bought more Netflix, which was around the end of October. I said they will get rid of that low-cost tier, and the reason is because ads are so lucrative that low-cost tier makes no sense for them to have because they are actually losing money. They can make more money if you paid for the ad tier and then served you up more ads. That's essentially what they're doing. So the cheapest tier that you can get probably starting next year here in the US is going to be $15 a month. That's the tier I'm on because we still have 2 households. Don't tell them, but we still have 2 households that are hooked up on it. So that's what it is. And remember, they make more money off the ad tier. So this is a stock you want to own. Netflix, own it. Own it. And I said this yesterday during TrendSpider's Live's version, and I will show you this real quick. But I said it yesterday. I have made more mistakes with this one and Tesla in not just owning this. And that's the reason why yesterday during earnings, I was like, hey, if you're not in it, you should have it. Doesn't make sense. I subscribe to Netflix. I think it's a solid service. But one of the things, if you are a TrendSpider subscriber, you should absolutely go to their YouTube channel and look at these office hours that Jason has. And when it's live, you should go there because every time I attend one of those sessions, I learn something. I learned something new. I learned a ton yesterday. And there's usually 10, 15 people. So it's like a one-on-one training service. Yesterday, my trading portfolio, which by the way, just so everyone's aware, in the 1 month, I am the third best trading portfolio on Savvy Trader. Savvy Trader is a service. It does cost $25 a month, paid annually, so it's like $400. You can pay for it if you want. I do keep up with my trades. I've had 6 trades over the month. I bought Intel. Now, I put 25 shares in here. I actually bought $25,000 worth of Intel. And the reason is I put it in the newsletter yesterday. You can read all about it, all about why I think Intel is a better earnings play than Netflix. Now, the crazy thing is I just don't know for sure. Anybody that tells you that they absolutely know for sure is just they're guiding you down an empty rabbit hole. But I basically put it in. I put the charts in the newsletter. I put the charts from Seeking Alpha about how it's underperformed. I think the PC market is coming back. I think AMD beats Intel in the PC market. But I think between Taiwan Semi, I think between its underperformance to the rest of the market, the problem is that you're seeing this, it's run up. And I got in at about 48.40, I think, somewhere in that neighborhood. Right now it's trading at about 48.41. So, but I just bought $25,000 worth. I am expecting this to pop over 50. I posted it, posted the graphs, posted everything. Can't do much more than that. DH Horton. The home builders have been on a binge of DHI reported earnings yesterday. Didn't come in as expected, down 10%. What I want you to do is if you're interested in home builders, I want you to keep an eye on this one because while their earnings were bad, this is one where they start lowering rates, could go in another run. And this run that happened, the algorithm got you in here October 26th, got you out with a 40% gain, but this was a 54% gain once it lost confirmation. So I want you to be in this name as the rates start to go lower. But DHI yesterday, they announced earnings. Let's go over some Tesla stuff. Now, there was a rumor yesterday, and it's a rumor that Tesla has notified its supplier that they are getting ready to do a new low-cost vehicle, and it's called Project Redwood. If you want to read that, just Google Tesla Project Redwood. It's an interesting one. Probably won't come up on the earnings call. If it does, we got bigger problems, because that just means that they're trying to hype stuff up. This is Gene Munster. He is a fantastic analyst. Tesla reports after the close today, he posted this yesterday, the key metric is auto gross margins is expected to come in line with consensus at 16.6, up from the 16.3 in September of 2023. Bottom line on gross margins, I expect them to finish the full year between 17 and 18%. This compares to consensus of around 18% in 2025. I believe the metric will rise between 20 and 25%. That's what you have to see on Tesla. Now, understand Tesla has been cutting their prices. Tesla has been trying to compete in China specifically by cutting their prices. Here in America, they've been trying to deal with and I say lack of demand, but I don't think it's a lack of demand, because they did sell out of their inventory. Now, what you have to understand is the algorithm has you out, but it will probably get you in tomorrow. I don't know, in the afternoon candle, it might get you in. If you have TRENDSPIDER, keep an eye on this. And the reason that I say that is because this algorithm makes you 87% over 2 years. Okay, there's 24 positions. So it's about once a month that you trade. You haven't traded in the month of January. So if it gets you in, the likelihood that you win is 42%. Your average win is 18.9%. This is if you had bought it 2 years ago and you're just holding it, you're down 29%. What's interesting is that if you go to the daily and you take a look at every time that the RSI is in this oversold territory, it starts to bounce up. We can see right here, and I'll circle this one right here. This is when the RSI is in low territory. If we just clone this and we move this over and we go to the next time the RSI hits down here, you can see it's down there. If we clone this and we move it to the next time it's down here, well, where is it? It's right there. We can even move this back, okay? And we can go to the last time, even the time before, clone this. Look at the RSI and look at each time that it happened. So I'm not saying that this is the time that it's going to happen. The MACD also seems to be crossing up at these times. The MACD is a little bit away from crossing up. The valuation in Tesla is crazy. Elon Musk is fighting for 25% of the shares, or else he won't innovate with AI at Tesla. He will start a new company. He said the Cybertruck will be the death of Tesla. They're having trouble selling this thing. I personally got an email. I don't know too many people who are dying to buy it. It's an influencer. At this point, it's an influencer vehicle. So I think one of my friends said that. That I tend to agree with. My thought on this stock, you don't have confirmation right now. If we run this and you get some type of turnaround here in the 4 hour and you get confirmation above 211, right now you're trading at 211. It's still touching that 9-day. That 9-day may turn over, but those Bollinger Bands are huge. You just had a death cross here. This is a stock that I have made more mistakes on than I've done right. And it's a stock that I should have bought and held. But in the near term, it's tough to buy and hold. And this is part of trading. And this is part of investing. Sometimes it's uncomfortable. But you have to make your determination about which side you're on. And so I don't know which side I'm on. I just know I think this one goes to 200 before it goes back to 250. And that's my guess. I may be completely wrong. I own this. I don't own this one outright. I own XLY. So I am invested in this one. I also own QQQ, so it's got some in there. I own ETFs with this one. I don't own this one outright, but it is one of the most anticipated reports this week. I, myself, decided Intel was a better play. I was wrong on Netflix yesterday, where I thought Netflix couldn't pop 10, 15%, and it did pop 10, 15%. I think it popped at its height. It was up 20%. It's up 12% right now. So I didn't think it could pop. It wound up popping. So I may be wrong about or Tesla as well. But have I mentioned SMCI? I'll keep saying that as SMCI moves towards 500. Shea Boular is another analyst that I really, really like. And he put out Stock Market Offer and Rewards category leaders. Here's a list of industries that currently have a duopoly. This is interesting. NVIDIA, AMD, I own both. Payment processing, I don't own either one of these, MasterCard or Visa, but they've been heavy movers. Home improvement, Home Depot, Lowe's, I've traded these in the past. I don't own them. Commercial aircrafts, GE was down yesterday, RTX. Package delivery, FedEx and UPS, we've seen those two. Smartphones was interesting, Apple and Samsung Mobile. I own Apple. So that's an interesting tweet that I think was a good one. Let's see. Big Apple news yesterday. If we go over here to Seeking Alpha and I go to Apple, I'll have a pic of this. There was great news. I mean, if you just look at this, it's funny. Spotify stock rises on new EU regulations, enables in-app purchases on iPhones. The news that hit me yesterday was glucose monitoring. The most attractive equity options and this is where it started, where I have the picture from. The most attractive equity options to hedge tech drawdown risk. That's an article you can read. 30 most inexpensive stocks with the highest exposure to China. That's one you can read. This is the one. Artificial intelligence is set to change the news forever, but how? And Samsung, Apple race to shake up glucose monitoring market. Those are the articles that I think you should read. I like Apple. I think Apple's going over 200. I do think that the chart is a bit difficult to kind of monitor per se. But you've seen these swings, and I've said anytime it gets down into the 170s, you should load up on it. Anytime it's in the 180s, it's an okay buy. I don't think you're going to get hurt, but I do think that 200 is going to be tough to get over. Now, the review of the core portfolio. This is interesting because, like I said, I'll just go over some stuff here in the core portfolio. Apple, I think it's going over 200. Buying at 195, not horrible. Don't load up on it at 195. Dollar cost average your way in, but I do think it's going over 100. Amazon still has room to grow, and I show this all the time. It's on the weekly. It has room to grow. Look at that top there. That top there is around, let's see, the top is 188. It gets to 190, and then it's going to, reject at 190. Boeing might be it's capitulating here, and it's down 0.47. I think it trades between 200 and 210 for a while. I think it rejected off this top 217 here, which was a gap fill where the Max 9 was halted. It got you in at 213. I'd be a little bit careful of this one. And the reason I'm careful about this one, the United Airlines CEO yesterday said they've lost confidence in Boeing. This might be a longer turnaround story than just a short-term recovery back to 240. So I'd be a little bit careful of this one. Bank of America, I still like this. If you see weakness in this stock, you can get out because remember they're paying about $2 billion in the insurance for the smaller banks. It's just one. Cleveland Cliffs, it's at 1853. It's going to 220. It's going back to 20. You're going to see this one get back to 20. So 1830, 1838, 1853. I think you're fine. I think you're going back to 20. Costco, we've talked about, anything you want to buy in Costco, you're fine. I think it's a little bit extended right now, but the second they announce some type of membership increase, I think that one's going crazy. Google, it's up above 150. I do think 130 was the buy on this one. It's at 140 now. So if you get anything in the 140s, I think you just load up on this one. Coke, we talked about. That one's back at 60. Goldman Sachs. Meta. Meta reports earnings next week, I believe. Maybe a little bit out. February 1st. So it might be next week or the week after. I'm not sure. This one's crazy, but it's not at its all-time highs. Look at the weekly on this one. You're getting back there. It right here at 384. I've been saying, hey, get into this one. You're 392 right now. It's a little bit extended, but again, if they print money, I mean, these guys are they're over everything. Microsoft, it's over 400. It's still got room with them monetizing AI, taking search revenue from Google. I think this one, again, if you had to choose between Microsoft and Apple, Microsoft may grow more than Apple, to be honest with you, because of the AI stuff. Now, if Apple comes back and says we have gotten into generative AI, I think that's a crazy, crazy good stock to get into. NVIDIA is cheaper today than it was last earnings. You're seeing this one up over 600. Anything you can get under 600, I think you load up on. I think you absolutely load up on. The valuation of this is less today than it was back here because of their earnings. So back here at 500, it seemed crazy, but the valuation today, and remember, SMCI pre-announced their earnings, and their revenue went crazy, and they can't get enough chips. Speaking of chips, Qualcomm, it's at 154. This one's probably going to 170. We can take a look at a long term of this one. I think this one bounces back to these all-time highs here at 170, 180. I think that one's a fine. It's in the core portfolio. Shopify, I pounded the table on this one when it was in the 50s and 60s. You've got to buy Shopify. You've got to get into this one. Yes, it's expensive, but it becomes cheaper as they continue to grow. They've gotten rid of their fulfillment center. Now Amazon fulfills for them. So their cost center is gone. It's an expensive stock. They announced later in February 14th, Valentine's Day, let's show some love for Shopify. Anything under 80, take advantage of it. Have I mentioned SMCI? We're at 470. We're going to 500. Their earnings are coming out next week, January 29th. They pre-announced. The only thing you can expect from the earnings is the talk about gross margins. If their gross margins, I expect them to settle, I said between 400 and 410. You're at 470. The only thing that can derail this is any mention of margin deterioration. They have more demand for these rigs that they're building than anybody. Remember, they build low energy rigs for AI. So, we went over Tesla. Tesla is now down at 209 instead of 211. I do think it dips under 200. I think when it gets under 200, I think you just buy that one. Uber we talked about. I think anything under 60, you just buy it. UNH, this was an interesting one. It's just floundering. There's nothing crazy about this one. It's under its 200 day at 517. If you wanted to buy this, I wouldn't say no, don't buy it here, because I think that under 500, we dipped under the 500 for a little bit. This is an industry leader. They don't have a catalyst coming up, but I do think that you get back to this range up here at 555. My dad, yesterday, we sold 100 shares of UNH. That was his entire lot. It's what, $50,000 worth. He bought it a couple years ago for $30,000, so it was around $30,000 to $50,000. It's in a retirement fund. What did I do? I wound up just using that cash, and I bought Intel for him. I bought Intel. I said, hey, let's just take the cash. I don't see United Healthcare having a catalyst, but I do think we could trade Intel. And at some point in time, when we buy Intel at 48, I think you're over 50. So you can sit there in your retirement account and just wait for it to get over 50. So, but Walmart, final one, Walmart. I like this one to fill the gap to 168. I mean, that's not a great move, but this is a leading retailer in the U.S. and the economy's fine. I own this. I own this for a long time. There's your look at the core portfolio. TrendSpider has a new indicator that you can add, and they go over in this particular thread some of what they can show you. It's insider trading. So you can take any symbol that you want and add insider trades. In fact, if you're a developer and you'd like to do this, they've left the code open. So they even used an ETF to where you can put all of the airline insiders where it paints it on the chart. It's an interesting indicator. I think Jason was showing it yesterday. It's got a nice setup in there. So again, if you're a TrendSpider user, you can do that. Now let's talk about some of the social requests. Ted from Facebook, DRCT. What the hell is this? Direct Digital Holdings. I can tell you right now, it looks like a hype train. DRCT, what do they do? Are they making money? DRCT, Direct Digital Holdings. They're an advertising agency, market cap 152 million. They only have 3.25 million shares. They are making money. Their PE is 45. Too expensive for an advertising agency? Are you kidding me? Target price $14.83. It's trading at $10.67. Nobody covers this. It's too small. Good luck in fulfilling any orders. Right now, the sales, December 10th and 12th, the CEO is selling $1.2 million worth at 10 and 11. So you're right at 10. Why would you think that, he wants to hold on to this when he's selling $1.2 million? The market cap's only $152 million. So he's selling close to, about 1% of the company. That's a big, big deal. So I'd stay out of it, Ted, to be honest with you. Sam, what's your opinion on TROX? Let's look at TROX. Tronics Holding. Would like to know what you think upside might be on this one. 2 weeks to a month. I'm still working out the bugs on my system. Thanks in advance. TROX. You can see, the algorithm, it loses you 39% versus buying and holding you loses you 36%. I think the stock as a whole is just a loser. If you want to trade this one, I would definitely trade it on a smaller time frame. TROX, if you look at this one from a fundamental standpoint, market cap, they do chemicals, $2 billion. They have 100, it's a little bit better, 154 million shares. They are losing money. Forward PE of 15. Price to sales is 0.79. Average target price $15.44. You're trading at $14.05. It got all the way up to $17.61. Insiders are selling. I don't think there's better places in your market. Here's the thing. What I don't understand, Sam, sometimes, and this isn't directed at you, but sometimes when you guys ask me about these crazy stocks, and it goes against my system and my trading history, because some of these stocks, yes, you can trade on momentum, but you want to do it on shorter time frames. You don't want to do it on a daily. You don't want to do it on a weekly chart because there's no hope. And that's what I see in a lot of these little stocks. If you're going to trade something, make sure it's a big enough cap. Make sure it's got enough of a future, because I can't look at a stock right now, TROX. I don't know what they do. I have no freaking clue. They're a chemical company. Great. But I don't know the ins and outs of the company like I know Apple. I use the iPhone. I use the iMac. I use the iPad. I have an Apple Watch. I don't know that kind of stuff. So upside, I don't know. Your guess is as good as mine. Right now, if you got in at 1268, it's been a good one. But, if you got in up here at the gap at 14, you're kind of hurting. Is it getting back there? I don't know. What's the catalyst that gets it there? Is it their earnings? Are they going to make money? That's where you've got to try. But, Apple, is Apple getting to 200? Yep. I can guarantee you that. It's going to get to 200. They're buying back enough stock. They've got enough of a catalyst. So when you look at these stocks, start building an understanding of not only the way that the charts work, but understanding the way that the company works. And you want your portfolio to be filled with stocks where you understand what the company does, how they work, how their management works. Target's a great example. I shopped at Target. The second I stopped shopping at Target, I should have sold it. The management just didn't do a great job with inventory. I saw there was lack of stuff. That's what you want to take with you. When you start just scanning for stocks and looking for opportunities in the charts, that's where I tend to think that you're gambling. Look for opportunities in stocks that you know, not stocks that just show up on a scan. That would be my guide for you, Sam. Zach, Airbnb, it's done quite well for me, but there's been a lot of insider selling lately, even from the CEO. What would you do? And this is from Spotify. I'm not a fan of Airbnb. I think that they have, hotels have started to take over and done better at this than Airbnb. I know several Airbnb hosts who just can't find people to fill their houses. They're not making the money that they were. It's a tough business. And I think what you're seeing is the valuation come back and hit Airbnb. I think, look at this. The PE 17, the forward PE is 33. 33. So their expected earnings are actually going down and the PE is getting hurt. So where do I see this one going? The average target price is 135. You're trading at 142. Most recently, January 9th, market perform and with the target price at 134. I would get out. I mean, honest to God, I would get out. Like, you see these huge sales at 136, 142. These guys know something. I mean, all the way through the end of last year, they're all selling in the 120s. I mean, there is not one buy in this long list, and we're talking millions and millions of dollars of people cashing out. I don't have hope for this one. I don't think it's a good one. If we go over to Seeking Alpha and we look at Airbnb, I have not invested in this one. I will tell you that Motley Fool seems to love this one. From a quant standpoint, Seeking Alpha, it's up 1 year. It's up 35%. They say hold. Again, the valuation is a D-. And ranked in industry, it's 8 of 37. This is hotel, resorts, and cruise lines. Royal Caribbean's the number 1. Trip is number 2. Carnival's number 3. Expedia, I like Expedia. I really like Expedia. I don't think that one's a bad one at all. I would find another one to get into. I don't think your Airbnb has a ton of room to grow. And I say that with fully knowing that I'm just not a fan. And I will use it. I use it every now and then. In fact, I think when I go to Arches National Park in May, I think we rented an Airbnb. Dex from Spotify wants GE. And I've gone over GE long term. The short term of GE has been super positive. When we look at the weekly, you can see it's soaring up. But if we go to a monthly, this one is just in rebound. And it hasn't even hit its 200-day. And you can see here, back in 2017, before it started all the trouble, this was the range that I put in the monthly. And I said once it got over 109, I think you were starting to get stretched. Well, yesterday, I think it was down. It's down 2% today, partly because of the engine problems I think that they have. It's not a bad one. I just think GE is part of the... it's a specialty, $138 billion market cap. PE is 15. Forward PE is 21. So it's a little bit expensive based on their forward guidance. Year to date, it's down 0.24. Average target price 143. You're at 127. 52-week range, it got up to 132. So you're only 3% from the all-time highs. I think the upside is a little bit limited. Honest to God, I think the upside is just a little bit limited. It's not one that triggers my fancy and says, oh my God, I've got to get into this. Mike, Tesla, after the last 3 earnings calls, Tesla is falling 9.8%, 9.7%, 9.3% respectively. Tomorrow we'll find out if it's a 4th consecutive dip on an earnings miss already priced in. We went over Tesla. Mike, my thoughts on Tesla, I think it's going to 200 before it goes to 250. And it's at 209 right now. It was up 1%. It's down to back to even right now. I just, it's hard for me to get excited when the CEO of the company, who's been the evangelist of the company, says, you know what? I'm not going to innovate with AI in the company unless I get 25% of the company. And he's the dude that sold this stock to fund Twitter. And now he's lost a bunch of money in Twitter. So I question his go forward plan, if you will. I'm not an anti-Elon guy. I'm not I'm not a pro-Elon guy. I'm kind of neutral on the dude, to be honest with you. But I do question kind of his go forward plan on this one. I am excited about the product. I still think by far best car out there. In fact, I may buy a Model Y in the next couple of weeks. I've been looking at it instead of the Cybertruck, just because logically it makes sense for me to buy that. Let's talk about scans. Netflix has a cross up. Of course it does. You're up 13% at 558. I would wait for 3 days. If you haven't gotten into this, the guidance for me would be, and you can see that the MACD just crossed up. So the scan says, hey, you should get into this. Well, you should have gotten in at 489. I would wait for this one to settle for 3 days. I think you're going to start to fill this gap between 536 and 493. I think you'll start to fill it. I don't think you'll completely fill it, but I think you start to fill it. I think you'll get a better entry price on that one. Next one that crossed up is Devon. I would wait, honestly, to get into this one. It's up 0.15. Energy's just tough. The algorithm loses you 45% versus losing 10% if you bought into this one. This is hard. Back here, I have a note. Look how clear since May we've been trading in that realm. Well, you can see that the trajectory now from long term is still down. Yeah, we're bouncing off that 200-day at 40. I would say rather than $50 being the price to buy in under, I would say buy under 40 and sell over 40. That's kind of my thing with energy. Now, one that has held up, that has another cross up in it for a short term, for a 4 hour, is NFLX. And hopefully you're in at 36. This is one that has a crazy good dividend, and it has been a solid performer for me ever since the pandemic. 8.66% dividend yield. NFLX. It's in the core portfolio. I think the chart speaks for itself. If we go for a long term, you can see you're getting an 8% dividend, and it hasn't really pulled back. You've got solid growth on the actual asset. It was a 9.34 forward dividend. I think it's still a solid performer. XOM. This is the core portfolio, by the way. These are the stocks that crossed up in the core portfolio. XON, Exxon. Again, I would wait you do have confirmation. It got in at 97.84. You're trading right at that level right now, 97.83. I would wait to see if energy really comes back. This one, I think you get back to 100. So if you want a quick pop, their earnings come out. These guys have killed it on earnings. Every time they've killed it on earnings, they've made money. They're basically, with oil presented at $70, these guys are making money with anything over 30. They're returning it back to shareholders. But you've had during this entire period, when oil was expected to spike between $80 and $100, it hasn't. And that's what's killing this one. So Exxon is one that's in there. Deer, Cat. ARC-G. One that has a cross-up that I think is interesting is Rivian. Rivian, are we seeing the bounce back up? We talked about this kind of being the range here. 1604. You are down 3% at 1548. Again, wait for confirmation to trade this one. I'd rather see you wait and get in at $16.80, $17 for it to cover this gap up to about $18 than to see you get in at 16 and see it pull back to 14. And I think 14 is a real number. Again, it's a little bit extended. One that I really like, and I've been telling you that I really like since it gapped down, was Fortinet. Now, Fortinet, we talked about down here at $50. I told you it was going to fill this gap up to 57. It filled that gap. It's trading at 65 right now. You still have room to cover this gap up here to 75. So if we just look right now, you've got 14% to cover that one, and you have earnings coming up on February 6th. I like that one. Again, it's a cybersecurity. I personally own PanW. I owned CrowdStrike. I'm looking to get back into CrowdStrike, but that's one that I think you should look at. Schwab is another one. Schwab is probably going back to 70. This one is at 63.83. You do have confirmation. It got you in yesterday afternoon. You're seeing a nice little volume shelf here build out at about 62 or so, providing a little bit. I'd say if you get into the 50s again on this one, you load up. They had their earnings. There's no real catalyst for this one. It's just going to be the financial sector that brings this one. Your RSI is down here at 41. You're crossing up below the oscillator. It all kind of looks like, if you want to get into this one, it's a solid name. Another interesting one is Citibank. Citibank is in the middle of a turnaround, at 53. I think this one goes to 60. If we look at a long term of this one, this is a bank that has been hurt. You're just getting to this 200-day, which is at 54.38. Now, if you can hold that 200-day, you can see we've rejected off of it a couple of times. It's a little bit extended on the RSI at 65, but if you want a long-term turnaround story, this is the one that you get. This is kind of like Wells Fargo was. Wells Fargo has made its run. I own Wells Fargo. We have a bunch of energy names that crossed up. We have 3 low-cost ETFs that crossed up. Sectors that crossed up that you want if you're looking to get in. XLE, energy. Like I said, wait for confirmation. XLE has the confirmation, but I wouldn't say that this is, rip-roaring, oh my God, we're going into an energy rally. The RSI's in no man's land at 42. You crossed up here below the oscillator. The 200 days moving negative. The 50 days moving negative. The 9-day has just started to turn positive. 21-day still negative. So I'm not super excited about the move here. I'd rather see you wait for confirmation and get excited about the move. Now, the material sector, this is Cleveland Cliffs in the core portfolio. This is one that made, got a buy in here yesterday afternoon at 82.86. Again, same thing. Your 9 days just moving positive. You did have this golden cross. This could go into a second rally here up to 86, but I'd rather see you wait for confirmation rather than have it pull back to 80 from 82. Now, you're using these as guides for other companies within those sectors. If you go over here to Seeking Alpha, and I know this is part of the free service that you can get when you sign up for Seeking Alpha, but if you go to XLB and then you go to the holdings, you can see it's Linde, Sherwin-Williams, Air Products, Freeport-McMoRan, Ecolab, Nucor, Dow, Newmont, PPG, DuPont. There's 31 different holdings. So you can take a look at those holdings and you can invest in, if the actual sector is moving, these names are the ones moving it. So, and specifically Linde, you can see Linde has been moving up. It's got a quant rating of a hold, but we've seen this one over year to date. This one's down 1.42%. If you look over 1 month, it's down 1.4%. 6 months, you're up 5%. 5 days, you're down. 1 day, you're down. So this one, the valuation is an F. It's ranked 2 out of 4 in the industry. Industrial gases. So Air Products, APD is the one that they recommend. It's got a buy on the quant. It hasn't been doing well, though. So this is how you kind of research and how you find stocks. So it's a solid way to play it. Again, sign up for the newsletter. It is free. Yesterday's newsletter had great content in it, I think. The paid newsletter is weekends. I do more of an education. Right now I'm in this education series where you can learn about PEs, Golden Cross, Death Cross, Confirmation, MACD, everything that I say, button hook, algorithm, Bollinger Bands, levered ETFs, where I'm creating this whole book of education, which will culminate in, okay, let's take a look at a stock, let's find some stocks, and let's find some opportunities. That's what I'm culminating in. So if you're interested in that type of thing, it's $120 a year. There's a founding member series where you can get for $400, you get the opportunity to do a one-on-one meeting with me. So go sign up for free. See if you like it. If you like it, then you can sign up for the paid version. But it's got a free 7-day trial on it as well. If you want any of the tools that I use, TrendSpider, Seeking Alpha, Alpha Picks, Webull, the newsletter, Patreon, Visible, which is my phone service, any kind of stuff, you can go over here to the Linktree, click on anything that you want. If you sign up for TrendSpider, you basically go over to TrendSpider, you look at their offer, you use the code DSP25 for 25% off whatever service that you get. I think, let's see what the pricing is. It's going a little slow. I think my internet's a little slow or something, but you'll get 25% off with code DSP25. Let's see. It is $1,488. So you get 25% off that, or $124 per month. Yeah, I'm signed in, so I can't kind of go through it. But use the code DSP. What you're going to do afterwards is you come back here, and there's an email right here. You can email me at dailystockpick3@gmail.com. I will email you back a welcome letter where you import everything for you. So let's hope Tesla, again, if you want to join me for Tesla Live, set it up. If I don't go live, then Jason from TrendSpider will be live. So hit me up with any of your questions. Okay.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading.